Hello and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, January 16th, 2025, we are focusing on the GBPUSD pair. Recent news reports indicate a weaker-than-expected UK GDP reading, which has caused some downward pressure on GBPUSD, and the current GBPUSD rate is 1.22287. Let's look at the daily chart to confirm this trend. Looking at the daily chart's recent history, we can observe a clear downtrend in the GBPUSD pair. This confirms the recent news about weaker-than-expected GDP and factory activity, which seems to be reflected in the market's negative sentiment. Now, let's examine the 1-hour chart for a more granular view of the recent price action, looking at the last 12 hours. The 1-hour chart shows several instances of support and resistance levels which correspond to the daily chart's larger trend, as expected. Notice the fluctuations within a defined range. To get a better understanding of the very short-term dynamics, let's switch to the 15-minute chart and look at the last 4 hours. The 15-minute chart reveals short-term volatility, but the overall trend still appears to be bearish. We see several instances where short-term buyers came in but ultimately the downward pressure prevailed. The lack of strong upward momentum reinforces the larger bearish sentiment. Based on our analysis of the news and the charts, we can see that the GBPUSD is currently facing bearish pressure. However, it is crucial to observe the market's reactions to upcoming economic data releases for a better prediction. Key price levels to watch include the recent support level around 1.2130, which held briefly recently, and the resistance level of 1.2390. The likelihood of breaking above the 1.2390 resistance seems fairly low unless there is significant positive news regarding the UK economy. A sustained break above 1.2390 would indicate a reversal of the current downtrend. Conversely, a break below 1.2130 could further intensify the bearish momentum. In the short term, we expect sideways trading with a bearish bias, possibly forming a pennant pattern as mentioned in the news. Looking ahead, market reactions to inflation data and other economic indicators will be vital for future price movements. Remember that this analysis is for educational purposes only and is not financial advice. Always do your own research and manage your risk appropriately.